So I'll move forward to section two, which is the underlying breadth of the market, where we'll try to find out and see if things are fine, good, bad, ugly, whatever it is, based on the underlying strength in the market or weakness in the market, and then we'll move forward to the stage two analysis, right? So we are looking at 2nd of April, and for the last few days, like if you look for last 6 days, right? The ADX has been arrested, which means that we have discussed this point, I think, in last call also, that the ADX is not moving in one direction, which means that the trend or the momentum reversal is undergoing, which also means that the kind of fall that we were seeing, like the negative directional index, was very, very high in upward momentum. But it's kind of arrested and it's juggling around this level, and the fall is being arrested in case of positive momentum, right? So we'll have to see if it reverses and comes down below 40, 39, 38, or whatever, right? So there should be a reversal in the directional index also. So we'll wait for that level. We'll want this MWRSI to hang or cross over 3, or it should be in a positive territory. So we'll wait and look forward to that level. The distribution day count is standing around 7, which is bad. There is no EMI which is standing as of now, and the India VIX currently is around 25. So this is a very bad sign still, where we are saying that no recovery is being happening in India VIX, and it's not coming below 20, right? So something is there which we don't know as of now. Okay. So either it has to again make a huge jump and cross above 30, which it might have done on Friday, but again, intraday, like within 2 hours of the day, it was bad. Not VIX. VIX was kind of okay. Like there was 4% jump in VIX. It still maintained like below 30. It was around 26 point something or 27, and thereafter closed lower around 25.5, right? So we'll have to look forward and see if it comes down below 20 or not, if things are improving. If not, then we'll have to wait and see if it crosses above 30 and the index continues to break down, right? So that is the scenario.
So
So we'll move forward to uh, a number of stocks in stage two, right? So we have seen a smart recovery, and right now we have 80 stocks in stage two, which it was around 47, which was very low. And we have seen a nice recovery around 80-85% recovery from there. And right now we are standing around 80. So that's a good one. And then we'll move to the right hand side, and we'll ignore all of these and just move to the right hand side and see again, as we discussed this time, where it was 59, 76, and 71. So this is an indication of the count of stocks which are not making new 52-week lows, right? So they are being arrested right now. The new 52-week lows are being arrested. And again, new 52-week high is rare, right? So that is why you have low number, right? But again, if it tries to break down, and a fresh new lot of stocks start to make new 52-week lows, right? So we can again see a number close to 500, 700, and 900, right? So it's a very bad scenario to be in right now. But again, it shows that the fall is being arrested. And at this point of time, like if you see this zone, right, when it was minus 947, it was one of the worst days in last 3 years. That is what I can conclude based on this number. And it was very bad actually. Okay, worst days in last 3 years. So and all of these stocks, like the number, if you can see, like 12, 9, 11, 10. So as we concluded in last 2 or 3 weeks, that for a bottom to happen, this percentage has to come down below 10, somewhere close to 10 or below. Also anything below that would be very, very nice. So that day it made a nice, like the day when the Nifty fell like minus 2.1%, right? So that was the day. So again, it came close to 10, 9 and something. So it was kind of a short-term low, but again, on Thursday it made a new low, and but recovery was also there. Okay, if you see this number, this shows that a lot of stocks have recovered handsomely, and it's a great sign, right? So a lot of reversal recovery has happened. So I'll just filter it in a way. So basically, if you could look into this data, right? So this data is from 1st January 2020. Okay, so basically, this data covers all of everything that was there during the COVID fall 2023, 2024, and 2026 right now. So all the falls that have happened in last 5 years, everything is there. So if you can see that the worst fall that happened was during COVID minus 1018, right? It was one of the worst falls, and if you could look into this number, so it was 13th of March 2020. So that was the day, which was very, very bad, right? So it was one of the worst days that we can see this number that belongs to. Okay, and if you could see the percentage, right? So only 4% stocks were above 10 DMA, 3% stocks were above 21 EMA, 3% stocks above 50 DMA, 5% stocks above 100 DMA, 8% stocks above 200 DMA, and 3% stocks above 50 RSI 50, and above RSI 60, only 1% stock. Okay. So that concluded. Obviously, I was doing the same commentary at that time, also 5 years back, and I concluded the same thing that for a nice bottom to be in place, right, we need to have this percentage very low or lower than 10%. Okay. But it was very low, you can see like that. And the number of stocks in stage two, if you would look into, so basically it's a refresher. So 24 stocks were in stage two, but the low was made on 23rd of March, where you can see like 5 stocks were in stage two, 19th March, 2 stocks were in stage two, 24th March, 5 stocks, right? So in 10 days, we have a single digit count for number of stocks in stage two. Got it? But in terms of intensity, last 5 years, 947, this is the count that we have. This happened on this day of this week. Like if I go towards 30 March 2026, so you can see that 947 minus 947 is the count. So I told that this was one of the worst days in last 3 years. I'll correct myself and I'll say right now, this was the worst days in last 5 years since the COVID fall, right? So that is the scenario or the intensity that we are looking right now. But this percentage is not that low, which shows that during pandemic things were very bad. Okay, it was really very bad, and things were out of control since we had multiple days of 800 to 700 negative days, right? All these days that you can see, and you can see that this number went as low as 2%, right? 2%, 1%. So that was the mere bottom that we had in COVID fall, right? That was another case. But right now, since this is the fall that is triggered due to the geopolitical scenario and the war scenario and stuff like that, so obviously it would not be like COVID, like within 1 month, the index would fall more than 30% and the stocks would fall 30, 40, 50%. So it's not happening that way, right? So right now it's kind of a very calibrated decline due to geopolitical scenario and a shock due to rising oil prices and stuff like that. Okay. So I'll conclude this section mentioning that we don't know what's coming in the future, whether we are going to make more declines or not, or a few more bad days are coming or not. We don't know. What happens in future happens in future. We don't know right now, right? But what we can conclude is this was the worst days in last 5 years. That is the 30th March 2026, and I think two factors worked out. One obviously was the war scenario. Second scenario was the tax loss harvesting. I mean, it was the last day, last trading day for the last financial year. So I feel like a lot of retailers, a lot of guys might have thought, okay, let's, obviously everyone would be in losses. So let's sell it anyway and buy it again. So again, that was the day. And beyond that, I think 2nd of April was the day when a lot of people might have thought, okay, we have sold it. Let's buy it again. Okay. So that might be a reversal recovery. Okay. So that is the scenario. I feel that's a psychological scenario. I don't know if it has played out that way or not. No one knows actually, but we can figure out in times going forward if that day stands out or not. Okay. So I'll conclude this section, and section two is done.